Okay, so that was my first video talking about Michael Burry's bearish target in the S&P 500, not a new thing. Now, let's see what happens and how we're going to get relief rallies, kind of pullbacks that we need to take advantage of, and that they will be based on the dollar index. Now, a lot of people try to say, well, why the dollar is so strong? Well, think about one. The dollar is the #1 and the most liquid currency on planet Earth. That's what it is. Uncle Sam is very smart. Now, number two, believe it or not, there is a seismic shift in the last 20 years where the Swiss franc and the Japanese yen used to be those currencies to protect value. You will take your $10, $50 million overnight. You don't take that in cash, but you park that money in Swiss francs and Japanese yen, especially the Japanese yen, because the amount. Now, I can be wrong about that. I can be wrong. If you want to be critical, let me know. Just bring the facts. But the wealth in the world, it's massively orienting into the whole thing of the US dollar. Why I say this, and I will continue with my second point. I say this because when you look at the whole thing of Bitcoin dollar, you see, so people, they're not rich or they didn't make a lot of money because of Bitcoin. I can take 10 Bitcoins and buy a mansion in Malibu. It's because Bitcoin / US dollar. So that's how they measure your wealth. And what it does is, for example, like the way you see the wealth transfer from the manufacturing in the US to China. Basically, the fact is, okay, so we didn't want those jobs, right? That they're not just like zipper jobs or like a bottom jobs. That's not what it is. There's a little bit of technical jobs as well in China. So what happened, you transfer that to China and they got rich because they got paid all those dollars, probably in local currency. But what I'm looking to send the message is that you have to understand that they just transfer wealth. And because they had a lot of people, labor was super duper cost effective, but that's a different topic. But my point is, when a lot of people talk about wealth and everything, yeah, I'm wealthy in euros and everything, but when you look at the size of the wealth in US dollar is huge, gargantuan. That's one thing. The second thing, as I said, 20 years ago, investors were flying to Japanese yen and Swiss franc. That actually shifted. And now people, in the presence of, for example, the last 14 years, slowly, no one noticed, but the US stock market was very strong. And on top of that, the fact is they did it with a strong currency. Yeah. If you look at equity indexes in Europe, they are down the hill. Now the DAX went up. Yeah. But if you look at the FTSE, it's not that much up. But if you look at the euro as a whole currency and the Great British pound, those currencies are both lower. Euro parity and the pound is not too far. It's like what, 15% about parity. That's only 15% premium for a currency that used to be, I think, 170, 160, when it was some point 180. Yeah. So that's something to understand. Now, why I'm recording this video? Because this sense of liquidity, this sense of protection is what's also keeping the US dollar up. The buck, the green, I don't know what you call. Wow, the green. These are another name. So what we're going to look now after that little speech, some ideas. And like I said, if you have a view on the US dollar, you can always share your views on the comment section of this video. Now, let's take a look at the DXY on trading view. And the levels I have are key levels to understand. First, we're coming from this powerful move recently, as of this year, powerful move, one of the deeps here. And very important to know what happened. We have remember the moving average. Every time that you see that moving average, it's the exponential 200, okay? So look at the powerful move at this November 21. Goes up, pull back. It's the beginning of the trend, and that happened on January of this year, 2022. Then we have pullback 1, we'll probably call pullback 2, 3, 4. Kind of look like number 5. And every time we have these pullbacks is when you see the US stock market rallying. So you have to pay attention and know what's the leading indicator. Now, it looks here that if we actually have a breakout, very bad above 110 for the US equity market, that will offer an opportunity for you to buy a counter trend opportunity in this around this area, and then looking all the way back to go to the trend line. The very important point in time, and I think that will happen in 2023, will be for us to see a massive breakout. This case, in this particular case, will be a breakdown and heading all the way back to this level where we will find liquidity at 104 for the US dollar index. And besides that, at some point we'll have this. This is the external. This is the internal, the one in red, but this is the external. Exactly, that's the external trend line. So even if we have a sense that this will be a massive opportunity for bulls to take over the stock market, but at this point it will be a position that as soon as we hit around 104.73, 103.84, you do know that it's time to take profits off the table. That's something that you need to understand. Keep an eye on it, and all time be aware that in 2022 your leading indicator of market activity, stock market activity, will be the US dollar index, because when investors are afraid today, they run over the hills and they buy dollars. They don't buy Japanese yen anymore, and they don't buy Swiss franc as they used to. So I wanted to record this video just to share with you my view on the US dollar. I think this is something that's been happening for years, but when you look at the long-term expectations, can it keep going up? Well, absolutely. It can always keep going up. That's not a secret, because liquidity will be found at the level of February, the week of February, first week of February of 2002, and that will set the stage for see a US dollar at 120. If that happens, very bad news. Now, what could be a hint that things are about to hit the fan? Well, you have 1, 2. This is kind of a head and shoulders here, shoulder, head, and then breakout, kind of neckline here. This level, just to draw it. That was the whole thing, and this was the scenario. Breakdown, and that was it. So if we were to have something similar to this pattern all the way back to the year 2022, I mean, now that will be even perfect. But on the other hand, it doesn't look like that so far. The other thing I want you to pay attention is how we have rotation. Because, for example, if you were not to look at the year 2022, if you look at the US dollar, this is the base of the move of the price action, right? So you measure this from the low of January 2018 to this high, and you have 14 points in the US dollar. So when I look at potential projection, nothing like price discovery, because the dollar has been higher in the past, like 20 years ago. Then you look at 14 points, and that tells me that we shouldn't be surprised if we see the dollar trading at 118. What does that mean for everyone? First, potential move lower in the US stock market if that happens, if that materializes. But you have to think that if you take just half of that price action, we're not too far at 111 points for the dollar index. Either way, most important thing to understand from this video: 1, US dollar as a leading indicator of potential pullbacks in a bearish trend that takes place right now in the US stock market. Second, we're not too far from the halfway from this strong move from January 2018. So that means that we might have a very strong pullback. But even if we have that pullback, you always have to pay attention, because we will move to this internal, the external trend line, bullish trend line of the price action of the US dollar. And then if we trade at 104, 103, yeah, it will be a powerful move. It will be a powerful rally. It can be an end of the year powerful rally for the US stock market. But pay attention, because once we get here, we can go back here for a second. I'll probably call round 2, kind of building up what happened in the year 2022. And that's very important, because that will tell us that sometime in 2023, going forward to the year 2025 and 2026, we can have explosive rallies in the US stock market. Guys, thank you so much for watching. This is my leading indicator that everyone needs to know in the year 2022, US dollar index. You can find this in TradingView. The ticker is DXY. And remember, yeah, I'm gonna leave now. This video, I will use the automated version, system that YouTube has an automated service that you can actually schedule. So this is how I'm going to pop. So I probably just pop this one in the next 3 hours. But guys, never forget, someone always knows.